Good morning, good afternoon, good evening, and welcome to the Monday, the 24th of October, Bull versus Bear webinar. Steve Miley on the call for Trade Day. Welcome, everyone. We're going to go through our regular run through with a slight change for a Monday. Going to look at the bigger picture view for the data, both the macro economic data and the micro earnings data coming up this week. So we'll run through that first of all. We'll take a look at articles from the major news wires, what's going on the fundamental side that's impacting markets right here and right now. Then we'll turn our attention to the technicals and take a look at the potential trigger points going into the day for the major markets you guys are trading, primarily the US indices. So let's take a look. Let's take a look at the. So I upload this into the members area every weekend, usually on a Monday. Sorry, not Monday, Sunday. And this is our kind of look back and look forward. Look back to what's happened in the last week and look forward to what we've got coming up. So so earnings. It's a real kind of at the moment. Hawks are staying hawkish in the Fed, but we did see a little bit of a backing off last week, right, from Bullard, right? Slight backing off from Bullard, but generally the Hawks have stayed hawkish through last week. And data sort of showing some slowdown in the US and global economy, but not falling off a cliff. We're not necessarily hitting recessionary signals at the moment. Although, a lot of concern that we could have a hard landing, but it could be a soft landing, so a non-recessionary slowdown. And obviously, some of the inflation numbers are still very high, but kind of slowing, and in some instances showing some signs of a peak and maybe even some movements lower in inflationary pressures. But generally speaking, the Feds have stayed hawkish. The Fed stays hawkish, but and yields have been continuing to push still for the most part, continuing to push to higher yields, both in the US and globally. However, earnings are actually coming in slightly better than expected. So third quarter earnings so far, meeting or beating expectations on the whole. We've had about a fifth so far of earnings. Next week, this week coming, and the week after, particularly this week coming, a very busy week for earnings. But of like the 20% we've seen so far, approximately 73% have exceeded forecast. And that comes in from a norm of around 70%. So we're doing better than normal. Then we're beating more than we normally beat when we beat. So that's good. I think also we've had a little bit in here of, I have focused on this every time this fund manager survey come out. It's not that we've just got this come out, but a lot of sentiment indicators have been very, very negative, particularly for the man on the street. Like the kind of the longer term money is very negative. So the Bank of America fund manager survey, for example, showing investors holding the most cash they've held since 2001, pretty much this century, since after the dot-com bubble burst, right? So even more cash being held than during the global financial crisis, 2007, 8, 9, right? So markets have, investors are certainly adjusted. Investors are very negative. They're very sidelined. So that kind of sets up for the market to pop higher, that is. And I think that's what we've been seeing. I said this day back here, where it is, Thursday the 13th, it was CPI day, when we had that massive turnaround, remember? So the S&P was down 2.4% that day and then ended up 2.6%, the fifth largest intraday reversal from a low in the history of the index as a percentage, right? Massive turnaround. All three major averages last week, they posted their best weekly gain since June on the back of that Thursday. So you had the Thursday, the turnaround, and then obviously that ran into the Friday. And then last week we had the best weeks up since 4 months since June of this year. So markets are certainly signaling a bearish exhaustion, a turnaround, at least a short-term turnaround, for me potentially a longer-term turnaround. And then last week I did signal, I said to you on Friday, I didn't have any strong view on Friday. I was kind of undecided. Ended up being a really big update, right? And I tend to be bullish anyway, but I did flag on Friday to watch this, not that. To watch this, the turnaround in the treasuries. I said, keep an eye on the treasuries here. We were down here, we'd rebounded back on Friday. Yeah, we'd started to rebound. And look, we ended up with this really solid hammer candlestick. And look, boom, up again. And then also boom, up through this downtrend line that comes off the peak from the 4th of October. Okay, so we've reversed the downtrend line on treasuries. So a lot of the negativity we've been having has been because of higher yields. But then more recently, you see here the last week and a half, we've gone to lower prices. This is the 10-year note future. Okay, and if we go and look at the yield, we've continue to go to, we've broken higher to higher yields from the beginning of October through to last Friday. Okay, gone higher in yield, but equities obviously turned way before then, right? So equities turned back here on the 13th, that day there. That's the day equities turned, right? And you go and have a look at those. That was the turning down the equities, right? When I called this turning point here, this would be, I said, potentially that was the bottom, right? Or after that day there, that's the 2.4% down day, 2.6% up day. So treasuries are continued to go lower, and they've been very much correlated. Treasuries are continued to go lower in here, whilst equities have based and then gone higher. And then I did say on Friday, watch for the potential turn on the treasuries. And we got that turn on Friday. There's the turn on the treasuries. Yeah. Strong intraday rebound. And that really then helps stocks surge higher. And we ended up, what did we end up? Where are we in here? We ended up about 2.5% on the major indices. Nasdaq, I think, was nearly 3% up. No, it was also 2.5%. Nasdaq came in about in line with the S&P, as I remember. Yeah, so it doesn't show it on here for whatever reason. Never loads of data, but we're up about 2.5% on all the major indices, and that was helped higher by that turnaround. This turnaround here in the treasury market. So going back to my original comments in here, so basically treasuries have continued to push higher. Fed speakers have been hawkish, but we got that turnaround on Friday, and that's helped treasuries. That's helped equities again, as well as the market very much in here, very, very underweight. I really think you could see a really strong rally now, end of year rally, and certainly going through late October into early November, because we've got a lot of bad news built in. We've got a lot of investors on the sidelines, and treasuries seem to be making that turn now. And earnings are coming in, pretty well, overall. So for me, if you're a swing trader, if you've got money on the sidelines, I know we're day trading here at Trade Day, but I think we've certainly seen a shift overall in sentiment. What else we had in here? So Liz Truss, the Prime Minister in the UK, has resigned on Friday as well. Actually, he helped the risk-on environment as well. Pound went up. On the back of that, UK stocks went up, helped global stocks up as well. And we also had, so it looks like Rishi Sunak is looking, Boris Johnson was in the frame, but now out of the frame. And looks like Rishi Sunak would be our new Prime Minister, probably announced in the next few days. The other couple of things to mention, I don't think this has actually been, it was like alleged intervention. The Japanese authorities have been a bit coy about this, about admitting whether they were, kind of some like rumors and on the wires kind of saying that they were involved, but, pretty much definitely were involved on Friday. Selling dollars, buying yen to defend the currency on Friday. However, the currency's rebounded really strongly again in here today. And then last week as well, the US announced a release from the US Strategic Petroleum Reserve, but oil actually was fairly solid, even given that. So stocks, to say, were very high. European stocks did well as well. US stocks did well through last week, and particularly Friday. US yields over the week were higher, but they did reverse on Friday. We've already looked at that. And then the other thing to note in here is the dollar. I want to talk about a little bit about the dollar. So treasuries have continued to go to lower prices, higher yields. There's the lower prices on the treasury futures. There's the higher yields. And then we turned around on Friday and back lower in yield today. However, during that same time, we go and take a look at the dollar. So dollar has been in lockstep with going higher as equities have gone lower, as we've seen a move into the dollar. So, throughout this year, and then certainly throughout September through October. However, look in here, end of September, the dollar peaked and came lower. And then that day there, when it failed again, didn't get up to the old peak. That day there was the CPI day, failed. And then failed again from the same level as the CPI day on Friday. So dollar hasn't gone higher, as we've seen a push higher here in yields, which would normally continue to take the dollar higher. There's the peak from back at the end of September. there's the 13th of May high, and the yields have continued to go higher. The dollar hasn't gone higher. So you've seen a dislocation. Yields are continuing to go to work up until Friday, go to lower prices, higher yields. The dollar's stopped going up, though, and stocks have stopped going down. So there's been that dislocation. The market's stopped watching. Maybe the treasury market's getting ahead of itself in here. And even that has been also echoed here on our Fed tool. So still nailed on in here. This is for the November meeting. So November meeting, not next week. Next week, not this week, next week. Yeah, the November 2nd meeting in here pretty much nailed on for a 75. But remember, when we looked at the December meeting up until recently, this was pretty much nailing on for a 75 here too. Now we've got almost split between a 50 and a 75. So there has been some easing of expectations as well. So it's almost like the Fed, the Treasury's got ahead of themselves. The market now seeing a potential, not as hawkish a tone coming through from the Fed. So maybe that's eased off. Sorry, maybe Bullard's comments assisted this as well, but they were more in the middle of the week. But you've certainly seen in here this has fallen. And if we go and take a look at the historical on this, so that's the, I'm just going to have to go back. So it's the 450 to 475. I go look at the historical at the 450, 475. This is very laborious, but nevertheless we'll get there. To uncheck all of these, and then I'll just show my point in here. So look, even back up until Thursday, we were up here at like 65, 70, 77%, right? And then boom, big collapse in here, okay? So, coming back from its very highest point in here. And if we go back and then look at the peaking rates, we looked at this at the beginning of last week. Peaking rates had got up to 500 to 525 through the early part of first half of next year. But look now, 475 to 450, 475 to 450. Through June now, 475 to 450. So the peaking rates was higher. Now the peaking rates easing off by 25 basis points. So I think that's interesting as well. And then if you go out now till September, you now see there a potential, actually see rates actually 475, and then getting close to, by the end of the year, potential for a rate cut as well. Okay, right. So just going back in here, so we've had, it certainly feels to me that we're a significant, maybe that was the low when I called that low back on CPI day. Yeah, that could be the low. I'm playing it from the other side. Now let's have a look at what we've got coming up. A busy week for central banks. Bank of Canada, statement and press conference Wednesday. ECB on Thursday, Bank of Japan on Friday. ECB is fully anticipated to cut to hike rates by 75 again. Okay. On the macro side, busy week. S&P global flash PMI. We've had a lot of those already in here this morning. Go to the calendar. Here we have. So it's mixed in here, mostly red, mostly missing, okay, for Europe. So we've got for France, Germany, Eurozone, and the UK, but kind of mixed. German services slightly beating. French manufacturing slightly beating. Most of the rest of it either mostly missing in here. And then we get the flash PMI at 9:45 Eastern out of the US today, okay. Both the composite manufacturing or all three manufacturing services and composite, we get that later today. Okay, we shouldn't be getting any Fed speakers. I think they're embargoed now. It's usually a week before. Maybe get some, but I don't see any on the wires here today. So usually it's up to about a week before. So that the meeting obviously the middle of next week. So we won't be getting any further Fed speakers. But if we go back to the bigger calendar, what else do we have in here? We get US GDP, PCE and durable goods on Thursday, and also PCE on Friday, and then German GDP and CPI on Friday. So the real focus for the rest of the week now, after today's flash PMI from S&P Global, we get the US GDP, PCE, and durable goods Thursday and Friday. That's going to be the focus there. And then those central banks through the week. Okay, let's have a look at what's going on. 5 things to start your day now. We've seen a big sell-off in Chinese stocks. Basically, President Xi Jinping in China effectively taking another term in here. Market took it negatively. Stocks went lower, but not particularly dragging down in any massive way European and US stocks. Could be UK could be hours away. Boris Johnson's pulled out now. Rishi Sunak, clear front runner. Penny Mordaunt is still looking to stand together, but she may not get 100 nominations, and that will basically then give Rishi Sunak a shoe-in to being the next Prime Minister. What else do we have in here? Some stuff about crypto, nothing really interesting. Equity futures. We were strongly up, slightly up in here now. And we've already spoken about the PMI data we have coming up. What else in there? US futures waver. China routes sour sentiment. Treasury yields going lower though, and gilts are significantly up in price, lower in yield. UK bonds, that is, UK gilts, as it looks like Sunak is going to win the markets like that, the ex-chancellor. Z's power grab spurs historic market routes. Stocks and yuan extend losses on Monday. Okay, so concerns about that, but not really having any contagion. And again, in here, focusing on China. And Bank of Japan suspected intervention at a record 37 billion. So that's the Bank of Japan. Dollar shrugs off suspected Japanese intervention. Pound eyes UK politics. Yeah, so the pound's up as well. And dollar yen has had a really big rebound. So I'm sort of rejecting that intervention we saw on Friday. And going into today, European stocks about 1.5%, 1 to 1.5% up. Remember, but a little bit of that is playing catch up on Friday after the strong closes that we saw on Wall Street as European markets closing earlier. And the US markets in here this morning slightly up, between 0.25% up, having had really strong closes on Friday. We've already looked at the Fed tool and we've looked at the charts there. Let's have a look at some of the, go in a bit more detail. While I'm on this tab, let's take a look at gold and oil. So in here, gold had a really strong bullish outside day, an outside pattern, lower low and higher high, not only from the previous day on Friday, but also engulfing the previous 2 days, so both Wednesday and Thursday's price action in here. So a very bullish day for gold. We have had a dip lower, but I think that's a significant turn for gold. And here, there's the dip back lower, having that really strong recovery in here. You can see reversing up through the trend line. And even though we've had this setback in here, the market has bounced. And if we go in on gold and take a look at the Fibonacci retracement, oops. No, it's not going to allow me to do that. One sec. Can I just get rid of this? Oh. Okay. Right. So let me go back and do that again. Let's see. So we had that really strong rebound in here. We have corrected back lower. There's a rebound from the low. And you can see they're holding at the 50%. Bang on the 50%. So for me, this is still intact. I've been looking for this to come back higher. And then I think, the most useful thing here is this down line here. If we get back above there, so really back above the current up peak, this little overnight peak. If we can get back above there, 1655 through 1655, this looks more bullish again. So playing that from the long side. Let's take a look at oil whilst we're on this tab. Very choppy, very sideways, big sell-off, big rebound Friday, sell-off and another rebound. Again in here today, going to the 15-minute chart, chop fest, no strong view. Hold a gun to my head, I'm bullish, slightly bullish, yeah. But no strong view there on oil. Let's take a look at the stock indices. For me, you have to play these from the long side. Really solid day on Friday, back up to the recent highs, pop through those. Been a bit of a choppy day today. This is the S&P. But again in here, really strong rally Friday, building on, there's the turnaround day from 2 Thursdays ago. That's the CPI day. Building on that, really strong close on Friday. And despite the setback again in here, if we go in here and we look at the fib of the recent, this is just Friday's rally. And you can see in here the market holding above the 50. We went below the 38.2, holding above the 50. Strong rebound, pushing higher. I can only be long on this. Looks this little rebound. Despite this sort of setback you've had, really strong in here at the moment. And yeah, I think back up to the highs and potentially above going into today. Where do we go to? Well, probably over here. Up towards 38, 33, maybe even higher. Maybe into this whole congestion zone, breakdown point there. 30, yeah, I mean, mid 38s is an easy potential here. Nasdaq, same kind of thing. Got big engulfing day, outside day, on Friday. Took out the highs from the previous 2 sessions from Wednesday and Thursday. Up again through last week's peak. Already this morning, dipped and rebounded. Rebounding now, easily targeting up to this higher here, 11, just above 11,500, maybe up to even into here 11, 6,700, 650, excuse me. Could easily see us aiming into there. Going on to the intraday, there's this swing back lower, rebound. Oops, wrong one. There's the swing and the rebound. Again, if you put the fib on, where we held. We held way above the 50% and back higher in there. Probably waiting to get above now that trigger point there, that little swing high. That high there, 11.4375 through 11.4375. Nasdaq looking kind of bullish as well in here. So, yeah, have to play it from a risk-on perspective. You know, long gold, which has gone back to being correlated with risk-on, and long stocks in here, and yeah, S&P is leading the way higher in here at the moment. So, and being helped as well, as we said earlier on, by treasuries. Going back to that treasury chart, keeping an eye on the treasury chart here. Really strong hammer pattern up again in here today. If we go in, let me just go into the 15-minute on that, and you see that that's not dissimilar to what we're seeing on the S&P right now, right? So looking for any break, another break higher here. Maybe on the treasuries there. This is a future above 110, 10.5. Bro, that little trigger point there. Above 110, 10.5. Treasuries look bullish, and that could help us higher on the stock indices. All right, guys. Any questions? There's no questions. I'll wrap it up there. Going to wish you all a great day. Great trading day, guys. Remember, please remember, on Wednesday, we have our first for a while, only a trade and mind session. So this Wednesday, the 26th, it's so I've got it here on my time, it's 1600 hours. So if you're, it's 5 hours ahead in New York. So 16 minus 5 is going to bring us to 11, right? Yeah. So it's 11 a.m. New York, 11 a.m. Eastern, 10 a.m. Central Time on Friday. Well, not on Friday, on Wednesday, the 26th. Wednesday, sorry. So please do join us for that. James and I will be doing one of our Trader Mind talks. All right, guys, I'm going to wish you all a great day. Take care. See you again tomorrow. Bye.